Now this is going to be a meaty session, guys, okay? So what we're going to do is we have the venue here till 4 o'clock. We're not going to go on till 4 o'clock, don't worry. Okay, but all I'm saying is we've got time to take questions. So if you've got a question while we're going through, I will stop every now and again and say, is there any questions? But if you've got a question, if you could just indicate to me in some way, shape or form, don't throw anything at me, okay? That you've got a question and we'll try and answer it for you. Josh will answer all the questions, okay? So he's really good. Okay, so we're talking about investments and how to make an assessment about whether or not you should invest in a specific coin or not, okay? There's two major things that you need to look at if you're going to invest intelligently. Now, my first couple of trades were gut feel. I didn't have any information, I didn't know how to look at the market per se, and I made some gut feel predictions in my head, and I put a little bit of money on it. I started like 50 quid or something, and I made some trades, and I fluked it. To be fair, I fluked it big time, but hey, the fluke paid off, you know. But that's really not knowing what I was doing, and we was in a bullish run. Okay, and a bullish run is, I'll just reiterate, just because some of you were late. A bullish run means the market is increasing. Okay, and it's called a bullish run because they give you the example of a bull that just runs forward and it doesn't stop. So that's why they call it a bullish run. It means the market is increasing. And if the market is decreasing, it's called a bearish market, because bears, when they attack, they swipe from top to bottom, indicating up and down. Okay, so I was in a bullish run, meaning the market was going up. I put 50 quid in and I earned 1,300 quid off my first trade. But thank you very much, very much. But I didn't know what I was doing, you know. But as I've got into this market and understand a little bit more, there's two major things to help you to make some investment decisions. And I am going to give you a couple of screenshots off of a couple of websites that will help as well, okay? So the first one is market capitalization. Has anybody ever heard of that before? Okay. Yeah, so market cap is what we generally call it, okay? So market capitalization is another measure to use when valuing an investment, because the market cap is a way to determine the value of a coin, because it puts a value on the people that created the coin, okay? So as an example, when Apple created the iPhone, and they sold it and it went through the roof, the value of their company shot up, right? Because their product shot up, that increased the value of the company, okay? The same is true of cryptocurrency. When the cryptocurrency's when the cryptocurrency's value increases, it also increases the company that started the currency. And we value the company by market cap, okay? And we'll talk about why that's important. So let's just read the caption. So market cap is a way to determine the value of a coin, because coins with a higher market cap are ones we would want to invest in, as potentially they will remain more stable in a volatile market. I'm going to read you the next couple of statements and then I'm going to explain it, okay? So coins with a smaller market cap may rock when big news hits the market, which it often does in the crypto world, which will always reflect in the stability of their price. Coins with a smaller market cap are a greater risk, because if their value falls rapidly, they can crash to nothing faster than a coin with a higher market cap. So let's explain that and break that down a little bit. So let's use Apple as our example, okay? Don't tell them I use them as an example though, because I'll probably fined a lot of money. But Apple's value skyrocketed as their product skyrocketed, and obviously the value of their company increased greatly. So let's just use a pretend figure. So let's say, for example, they were worth $1 million before they launched the iPhone. And then let's say they increased the value to 5 million, okay? So you've got a company that's gone from 1 million worth to 5 million worth, and now they're worth 5 million, meaning that if their profits decreased, they've got a bigger market to still stand, because they're now worth 5 million. So they can stand to lose a lot more money because they've already increased their company's value. So if things start to go wrong, they've got a bigger pocket that they can draw from to stay afloat. Now, if you've got a company that's only worth 500 grand, if their product begins to bottom out and decrease, they've only got 500 grand to use in order to keep the company afloat. Okay? So market cap is the way to determine the value of the coin. So it's a safer investment if you have a higher market cap, because if things go wrong, they can still stay afloat, and potentially you're not going to lose your money. The value of your investment is going to go down because the price is going to go down, but you're on safer ground because you know that they're not going to fold tomorrow. Okay? So the way to determine that is through market cap. Is that clear? Does anybody have any questions on that so far? Cool. So we calculate the market cap of a coin because it is different than the stock exchange and companies that are floated on like NASDAQ or the British Stock Exchange, okay? And it works slightly different. But with the cryptocurrency market, we calculate market cap of a coin by taking the amount of circulating coins times its current price, okay? So as an example, if a coin has a total of 100 coins in circulation, and each coin is worth £10, the market cap of that coin is £1,000. So you take 10, you times it by 100, you come to 1,000. At least that was it when I went to school. I don't know if it's changed, but that's what we work it out to. So we could work out the market cap of that company at 1,000, okay? Now in real terms, if a company was worth £1,000, it's not worth an investment. Because if something goes wrong, where's their pool to draw on in order to stay afloat? They don't have one, okay? The crypto market as a whole is worth $170 billion as a whole. Not one individual coin, but the whole cryptocurrency market. Bitcoin as an individual coin, its market cap is $94 billion. So it's a safe bet, right? You've got $94 billion to draw from if things go wrong. Ethereum, which is the second biggest cryptocurrency in the market, is worth $32 billion market cap. Okay, again, it's another safe bet, right? Ripple, which kind of goes up and down between the third, fourth, and fifth biggest crypto, is 10 billion. So again, another good bet, right? Bitcoin Cash is worth 5 billion, and Litecoin is worth 3 billion. So these are a part of the top 5 cryptocurrencies. So if you put in £100, you may not become a millionaire tomorrow, but because they come from good stock, if I can say it like that, the potential of your investment increasing is much higher because they have more market share and a bigger market cap, right? So the higher market cap of coins represents a safer short-term investments because they offer more stability. So if I invest in Bitcoin today, I've got $94 billion before that company goes bankrupt, okay? So short-term, without a shadow of a doubt, they're a good bet. And obviously they've got a greater ability to bounce back from market volatility. Higher market cap in the long-term investments are preferable because it may indicate bigger profits due to their staying power. So the longer that a company stays in the market, the greater its potential to increase because it's in the market and it ain't going anywhere. Do you know what I'm saying? And the opposite is true as well. Any questions on that so far? No? Cool. This here is a screenshot of what's that?
CoinMarket.com.
CoinMarket.com. Okay, coinmarketcap.com, I believe it is. Okay, now if you look here, that's Bitcoin. Okay, this is the market cap, which is running into billions. Here you have its volume traded daily in Bitcoin. Okay, that's not actually physical. Sorry, that is the physical money. That's the Bitcoin value, how much is traded. Okay. Now, for this moment, we're looking at market cap. Our next thing, we'll look at volume, but we'll come back to that. So the market cap is $6 billion, right? And this is Bitcoin. Ethereum, you've got this. Ripple, you've got this. Litecoin, you've got this. This was taken a little while ago. This isn't current, okay? It was just a screenshot I came across that it gave us a good example. So when you go onto this website, you can get the market cap for all of the major coins, which is a good indication as to whether or not they're worth an investment. Here, when you click on this side, it gives you the graphs, which you can get over 7 days, you can get over 24 hours, and I believe you can get over a month. I'm not sure if they give you a year or not, but you can certainly get a day, 7 days, and up to a month on these graphs that show you the trading pattern up and down. But in terms of the graph, it's the market cap that you're more interested in, because what this is telling us in short is that this is worth an investment because it has a huge market cap. Okay? Any questions?
With the graph, you said the market cap's more interesting.
Yeah.
If the graph is going down,
yeah.
the market cap is high,
yeah.
is it a good time to invest?